All right, folks, in this video, I'd like to go over a mistake I made in trading by not following my trading plan. So how does that look? Let's get into it. So here I have pulled up a chart of Meta. Meta had good fundamentals. They had solid financials. It looked like a good opportunity for some short-term trade ideas. So I have Wednesday, Thursday, Friday, Saturday. I've split up the days with these vertical lines. I got into Meta around Thursday here. This is the zone here. I saw Meta coming off of this support level. It's a strong support level held since that looked like Tuesday or Monday. It bounced. It shot up, it hit a resistance, pushed through the resistance, pulled back to that resistance, which would then almost serve as an area of support, as often happens. You can see the auction zone. If I highlight it for you, it's a pretty broad auction zone, and there are smaller ones within it. You can see with this box that I've drawn, there's a region of price contention. So Meta hit this resistance turn support. I got in the trade around here. Meta proceeded to go up. This was a bullish trade idea, so I was expecting the trade to go up. Meta ended up going back down, sinking, and it fell. And at this point, I said, I got out of that trade, so I lost maybe 10 or 20% of the trade input. And then it rebounded and found this price point again here. And so I tried to go short. It gapped up, but immediately started falling that next day from the first trade I got in. And I put in after I got out of the bullish trade, I made a bearish trade to collect some of this profit, but then it rebounded. And so I got out of the bearish trade and lost 10, 20%. So I've lost 2 trades in a row. And this was a feelings-based trade. So I thought, okay, I feel like Meta is going to do well because I saw price action, I saw volume, and those were signs that told me, I saw my cumulative delta volume. I have those candles here below. When I pull up delta volume, you can see the delta volume you can sort of see it, but let me make it a little more dramatic. You can see delta going up with price action that Thursday. So I had 2, signs of confluence, but I really didn't follow my trading plan like I should have. And so I lost the up trade because it shot back down. I lost the down trade because it rebounded on the down position. And I tried a third position to get an up trade. So I tried to trade upwards. I tried to trade downwards. And then as it rebounded, I tried to get in again up here. So I made a second bullish trade. And what happened? If I stretch out price, you can see it started working its way up and then fell back a good percentage. And I was in an options trade out of the money. I didn't pay a lot for the contract, but it lost a lot of value when we went from 129.20 to about 128.60. So it had pulled back, and I'd probably been down 20, 25% of the trade, and I got out of my second bullish trade. But look what happened. It hit the top of this auction zone. It found some support here and carried on back up to 129, 130. And if I zoom out, you can see Meta ended up going to about 133, 134. So you can see our auction zone that we drew, and it continued to go up for the rest of the week. So I missed out on the second bullish trade because, one, I wasn't patient, but the bigger thing I want you all to see is I didn't follow my trading plan correctly. Now, my trading plan, if you follow my class, is based on fundamentals, technicals, and market sentiment and order flow. These were emotional trades that I entered, these were impulsive trades that I entered. And for that reason, I lost multiple trades in a row. And as you'll find out in the market, it's a little bit harder to recover money that you've lost because your profit margin percentage-wise has to be greater than the losses. So the important thing to note is I probably wouldn't have lost this many trades. I probably wouldn't have entered this many trades if I stuck to my trading plan. My trading plan involves some short-term trades, some swing trades, and some long-term positions, including leaps. This was a short-term trade idea that I didn't manage correctly and didn't follow my trading plan on. What would I have seen differently had I followed my trading plan? Well, one, I would have checked on the fundamentals of Meta and the company financials, company news. I would have looked at overall economic news to figure out why this market is bouncing. I would have made sure that I recognized that Meta has a high beta, meaning it moves a little more dramatically than the overall market. If you want to look up the definition of beta, you can. And I didn't follow my technical analysis, which would involve one, your support and resistance, your supply and demand zones, your auction zone theory. So that would entail looking at the top of this and saying, where is my major support? And I would have drawn it closer to here. So when I got in the trade, I know that this is sort of a floor for me. In addition, I could have looked at my RSI, which I'll pull up now. And you can see the point where Facebook fell back, the point where Meta fell back, it actually bounced right off of the 50 point, about the 50 point on the RSI. It made a bounce here and continued to go upward. The 50 point, as I point out in my classes, is a common place for RSI to bounce. The other thing I would have noticed is my moving averages. So here on my moving averages, I like to keep my 5, 10, 20, and 200 open for shorter term trade ideas. And I like to look on the 5-minute, the 15-minute, 30-minute, 1 hour, and daily charts. And you can see here on the 15-minute, we bounced right off of our 20 EMA and kept going up. I could have looked at my Bollinger Bands here. And you can see on the 5-minute chart, I rarely check out Bollinger Bands on these low time frames like 5, 15-minute, 30-minute charts. But you can actually see it bounced off of a lower support on the bottom Bollinger Band on the 5-minute chart. So that's a 20 period. So that's about every 100 trading minutes in the day. I could have looked at my VWAP, or volume weighted average price. So if I turn off Bollinger Bands so you can see VWAP more clearly, this tells me pretty much the average price where people are buying in. And as you can see, when when Meta was rising and came back toward the VWAP, it actually rebounded before it even touched the VWAP line. So VWAP is a popular indicator to use in shorter term trading. I could have looked at this as well and found out we're actually hovering right around the positive 1 standard deviation line. So price still had good bullish momentum, at least in terms of where people are buying in. Now, MACD is an interesting one because if I'm looking short term, and I'll show MACD here, MACD was actually sort of falling here. So you can see it was curling, already starting to curl downward around where I got into the trade. There wasn't a crazy strong bullish move upward. So maybe I would have waited a little bit to see some more confirmation for entry. Here on the 15-minute chart, I'm showing MACD kind of leveling out here. So not a very clear signal that I want to jump in a trade, but it does show me it's flattening a little bit. Maybe buyers are kind of rallying themselves for another bullish push, which is what happened. you'll see that happen sometimes with what's called a bull flag. So I could have looked at a number of different technical indicators, chart patterns, support and resistance, or supply and demand. I prefer to use that. I could have looked more into the fundamentals of what's going on in the company and the economy. I could have looked at lots of different technical indicators, including my RSI, my MACD, my Bollinger Bands, my VWAP. I could have waited for strat signals. Well, strat signals were giving me a lot of two up candles. So looking at this trade, I could have made a number of observations with fundamental analysis, looking at the health of the company, looking at the overall economy. I could have looked at my technical indicators, including the RSI, which bounced off the 50 mark. I could have looked at the flattening of the MACD. I could have looked at VWAP, like we saw earlier, and how it was still in the volume weighted average prices, area of bullishness, so to speak. I could have looked at my Bollinger Bands. I made a lot of shortcuts, and it ended up costing me multiple trades. And in the long term, the price eventually went up quite a bit. So if I stayed in the original bullish trade or even the second bullish trade, I could have made quite a bit of money if I had known my take profit levels. I had my stop losses. However, because trades weren't very well thought out, they were almost reactionary or impulsive. I was trying to earn back money. Might have been a little revenge trading there. I ended up losing money where I could have stood to make quite a bit of profit had I stuck to a trading plan and carefully entered the trade that way. So I just wanted to point this out because there's a lot of money in this market if you go about your trading in a well thought out way, an organized way. I could have stood to make a lot more money and not lose much money at all had I had an organized, well thought out trading plan and kept my emotions in check and whims or impulsive ideas in check long enough to allow me to enter the trade properly. The last thing I want to show you is order flow. So I have my cumulative delta volume. The other indicator I'd like to pull up here is what's called the fixed range volume profile. When I do that, I pick two places on the chart and I try to find in a particular area or particular time frame what the volume looked like. So I'm going to extend it over here from the leftmost part of my screen so that's a few days, maybe a couple days and a half, to the part where the market started to go down. So I can get a quick snapshot of where most of my trading volume is. What I see here is most of the volume occurs on this red line, which is pretty much it's sort of an average of where most of the volume's occurring during that time frame. And you can see it's here around $126.80, close to 127. And you can see price reacting here at many points in this time frame that I've made the FRVP indicator. So it reacted several times at that zone. And what you can see is that partly explains this bounce we saw between the 2 days. So if I know price action bounced where most of my volume is at and started to consolidate where more volume is accumulating, you can see on the edge of the FRVP here, we still have a lot of volume here. And we have this support here or demand zone newly established. I might have stayed in the trade knowing where my volume profile is telling me potential support and resistance in the chart might be. So a reminder with these trade ideas to stick to an organized trading plan and to take your emotions out of it and trade with a clear mind. Have some sense of composure and preparation before entering your trades. Good luck studying and trading. I'll see you all in the next videos.